All right, good evening, everyone. It is 9:30 p.m. on Saturday, December 29th, 2018, New York time. And hope everybody's doing well and getting ready for a great New Year celebration and be hopefully the one of the first to wish you a happy New Year and a healthy, happy, and successful one coming up in 2019. So, want to make a quick video. Just in regards to some Elliott Wave information. And there's really only, honestly, only a couple of rules, hard rules that Elliott follows. Everything else is kind of guidelines and, just basically, not hard and fast, but good things to go by. So I want to just review a couple of things. I would make a recommendation. So I want actually before we do that, I want to make two recommendations. First, if you're watching this and you have not subscribed to my channel, please go to YouTube and search me out here and like my channel and watch some of the videos and let me know what you think. Leave comments, share the videos, and try to spread the word. So that's me, and you can go ahead and hit this little bell icon up here, and that will help you get notifications as soon as I post something new. Okay, so in regards to Elliott Wave, one of the best websites I think where you can learn, if you go to this website, elliottwave.com, these guys are kind of the original Elliotticians. And this is not just for Forex trading. These guys talk about all markets, whether it's stocks, commodities, Forex, whatever. So, and because Elliott Wave applies across all different all different markets, not just Forex. I just happen to be a Forex trader, so that's what I talk about. If you go to elliottwave.com and you click and sign up for a free access, free what they call my EWI account, and I think this probably, yeah, I'm already logged in. So if when you log in, after you create that account, this is what you'll see. You'll have this my EWI. And there's a lot of stuff on here that you can get for free. And under free resources, you can go to Club EWI, and you can see some stuff on here. This book, The Elliott Wave Principle, which is available anywhere, Amazon, Barnes and Noble, whatever, is kind of like the Bible for Elliott Wave. And if you're going to be an Elliott Wave trader, you should buy this book. You can also get it online here on their website, and you can actually read part of it for free. They usually actually have the whole book up here that you could read for free. You just couldn't print or download it, but they've taken that away, so now you can just read the first part. But this book is pretty cheap. You can buy it for about probably $20 US on Amazon, whatever, and this should be sitting on your desk as a frequent reference if you're going to be an Elliott trader. And you don't have to read the whole book. You read about the first 80 pages, which is like the first 3 chapters, and you'll get pretty much everything you need to know. But it's a great reference. So I would say, to check that out. But there are free things on here. Now I've got some stuff I've paid for. But if you go to, again, to Club EWI under free resources, you can actually get some great stuff on here. So, learning the basics is probably the best thing. Introduction to the wave principle is probably about the best thing on here. So, but there's a lot of stuff. So go to Club EW to elliottwave.com, sign up for my EWI account, and buy the book if you haven't bought it already. Okay, that's honestly for self-education. It's probably the best thing you can do, besides watching some of my videos. So let's just run over to the charts for a minute. So I've got this one labeled. This is the U.S. yen. This happens to be a 12-hour chart that we're looking at right here. And so here's the rules. Okay, first rule is wave 2 can never go beyond the origin of wave 1. So here's 1, Here's the wave 1 down. So we're looking at this area right here. Okay. So here's wave 1 down. So here's wave 2. Wave 2, if it went up and it closed above this high right here, then you are not labeling it correctly. This was not a wave 2 in that case. Okay. So that's the first rule. Okay. The next rule is wave 3 is usually the longest, but it can never be the shortest. Now, in most cases, this is what you'll see. 1, 2, 3, 4. Now we're in a 5 right now. And you can see wave 3 is clearly longer. You don't have to measure it. You can tell by looking at it. And if you want to really get technical, you can say a lot of times wave 3 is a Fibonacci extension of wave 1, but we don't really even need to go there. Wave 3 is never the shortest, and it's usually the longest. But the key is it's never the shortest wave. Okay, doesn't have to be the longest, although most of the time you will find that it is. It's the big impulsive wave of a trend. Okay, so that's rule number 2. Wave 3 is usually the longest, but never the shortest. And the next rule is wave 4 can never go into the price action of wave 1. So I'm looking at this move up as the wave 4, this green candle right here. If this had rallied all the way back up and was somewhere up in this area, so here's wave 1 again, and this went all the way up and we got some kind of close, or action up in here, then this was not a wave 4. Okay, so those are basically your 3 hard rules. Okay, wave 2 can never retrace more than 100% of wave 1. Wave 3 can never be the shortest. Wave 4 should never go into the area of wave 1. Okay, outside of that, everything else is pretty much a guideline. So let me see if I can show you anything with this particular one. Somebody had asked about wave 1 and wave 5 being the same length. That is a guideline. Let me take this box off of here first of all. Okay, so as a general rule of thumb, wave 1 and wave 5 are usually about the same length. Where I have this horizontal line drawn in is the distance of from here to here is the same as this wave 1. Okay, I already drew it in just for my own benefit. So if we measure this, here's the wave 1, it's 181 pips. If we measure from this high down to here, actually I have that drawn a little bit high. This needs to come down just a tad bit. Okay, so we'll call it like that. So this is about where I'm expecting this to retrace to. Now, this is a visual skill. If you read the Elliott Wave book and you spend time on elliottwave.com, even if you don't buy and by the way, on elliottwave.com, there's lots of stuff you can buy too. There's courses you can buy. Some of them are pretty cheap, 30, 40, 50 bucks, and some of them get pricey. You don't really need to, but anyways, so just as an aside. Elliott Wave is as much a visual skill than it is everything else. What I was going to say is, if you read the book and you go on their website, you're going to find things. They're going to start talking about, complex corrections and double zigzags and triple zigzags and, X waves and, Y and W waves, which are all corrective patterns. And at the end of the day, that's really nice if you're going to be an Elliottician theorist and just counting waves. But in the real world of trading, I'm not sure how useful all that is. So as long as you know the hard rules that I just mentioned a little while ago, and then just keep some of the guidelines in mind, that's really what you need to know. And so to me, this is a visual skill for me to open this chart and scan through multiple time frames and be able to pick out the trends. And I always start around the daily, maybe the weekly, in this case the daily. And this immediately stood out to me, this trend, and I labeled it. Okay, and I will look for this market to turn around this point. Okay, now I could be wrong and it could keep going, and like I said, there's no hard fast rule that wave 5 has to be the same length as wave 1. It might be an extended wave 5, and there is such a thing called an extended wave 5. Again, that's in the book. But, again, it's just for targeting purposes. Sorry, I have a drink. Okay, so that's just something to keep in mind. So Elliott Wave is much more of a visual skill, in my opinion, than counting every little single solitary move. Now, but one thing I did want to talk about is, well, so we talked about wave 5, saying in this case, well, when's this wave 5 going to end? Well, this is an area down here I would look at as of interest. But what you really need to do is go to this price action starting from this red candle and go down to a lower time frame and see if you can identify the subdivisions of this wave 5. Okay, because yeah, I can say, well, it's going to end about right here, but if I really want to kind of get an idea, then you want to drill down a little bit and find the subdivisions of this wave. And remember, this wave 5 in of itself is going to have 5 waves. Okay, everybody know what nesting dolls are? I mean, I think those are like anywhere in the world, but just bring up a page here. My internet's really slow tonight because my kids are. So everybody know what nesting dolls are? It's like these things, right? Right, where like one fits inside the other one. Here's, this one fits in this one, fits in this one, fits in this one, all the way up the line, right? Those are nesting dolls. Well, that's how you have to look at Elliott Wave. So here's the daily. So the daily is kind of like, the big mama here. Okay, it's like one of these. And then you go down to like the hourly chart, and the hourly chart's like one of these little guys. So within one of these little guys, there'll be a 5-wave trend that will fit inside the larger wave 5 on the longer time frame. Okay, so this move down is the wave 5 on the daily chart, but in and of itself, it's going to be a trend on a lower time frame. Okay, so and usually you go about 1/4 of the way down from where this from where this is. So that would be probably around the 4-hour chart, maybe the 6-hour chart. So let's go down to the 4-hour. So now here was the beginning of that wave 5 down on the we're on the 4-hour chart. This was the beginning of that wave 5 that we saw. And I'm actually going to go down a little bit more. Okay. And so basically what I'm seeing is this is wave 1, 2, and now we're in the middle of 3 of 5. Okay. And here's my target. Now, just looking at this, it looks like this probably will overshoot that target a little bit, but that's okay. It might be a big wick or something. So again, this is that wave 5 from the daily chart. Okay, that is right here. See the arrow? Go back to the 2-hour. I'm going to just scrunch this down a little bit. 1, 2, we're in 3 now. We'll continue down. We'll have another little correction, and then we'll go down again. And that will finish out the wave 5. So that's what I'm saying about nesting. Okay. The other thing I wanted to mention is that although it doesn't really show it in this case, and in Forex, let me see if I can find another pair that might show that better. Yeah, I don't really like that one too much either. I just want to try to show you something here. Yeah, that's a little better. Let's see here. Okay, we'll use this one. Not great. There's another guideline in Elliott Wave. It's what they call the rule of alternation. And this is really not all that important, but it's a nice thing to look for. The rule of alternation basically says this. In a 5-wave trend, now here we have a 5-wave move up. I've labeled here 1, 2, 3, 4, 5. Wave 2 generally is a more steep correction. In this case, what they call a zigzag, which is a type of correction that you can read about. So, and wave 4 is usually more of a sideways correction or some kind of a flat or maybe a triangle, which again, those are 2 other patterns of correction. So the rule of alternation in Elliott means that if wave 2 is a zigzag or a steep correction, wave 4 is going to be more sideways. And generally that's the way it is. Wave 2 usually is the steep correction and wave 4 usually is more of the flat sideways correction. And that's exactly what we have here. We've got this perfect little ABC zigzag correction. And you can see the wave 4 is kind of like you know, down, up, down. This is like a classic flat pattern. And it might not be perfect. There's very few perfect corrections, but so we're on a 12-hour chart. Let's zoom down a little bit. So we have an ABC. So I'm looking at this as the wave A, B, and then C. And this is actually would probably constitute what they call a running flat, if it's true, because wave B went past the origin of wave A, but it's still a flat. So it's a sideways correction, up, down, down, up, down, and then up for wave 5. Whereas you can see this wave 2, see how steep it is? This one moves more sideways. This one moves, more down. You can see the box is just narrow. This one's more like a square. This one's more like a rectangle on its edge. Okay, so that's the rule of alternation. Well, wave 2 generally is a sharp move, corrective move against the trend. Wave 4 is usually sideways, but it can be reversed, and that's why it's called alternation. Because if you see a sideways move in wave 2, then wave 4 is probably going to be sharp. But this is usually how you see it. I find a lot of times in Forex that wave 2 and 4 are a lot of times are always sharp. You don't always get the sideways action, but generally this is what you see. And this is a good example, okay? There's lots of different types of corrections. Like I said, the most common ones are zigzags, which is what this is. It's a 3-wave corrective pattern, and a flat, which is usually in wave 4. You also, a lot of times you'll see triangles in the wave 4 position. You probably are never going to see a triangle in wave 2. If you're counting a triangle in wave 2, you probably have it labeled wrong. Okay, triangles are usually in the wave 4 position, or maybe in wave C of a correction, or B. But again, it's more about visual skills. So just really keep that in mind. Again, if I erase everything off this chart and take all these little drawings I have on this chart, just get rid of it. Okay, I look through my charts. I open this pair up. This catches my eye. 1, 2, 3, 4, 5. It's a perfect trend up. Okay, and now it's in a correction. This move down is some kind of a correction. Okay, so I'm going to look eventually for this to turn back up again. Now, one other thing, again, this is a guideline, not a rule, is that once a trend ends, the correction usually goes back to the area of the end of the previous wave 4. So if we have 1, 2, 3, 4, here's where the 4 ended, and then it went up for 5, right? 1, 2, 3, 4, 5. This correction probably will go back to somewhere in this area. Okay, here's the end of the previous wave 4, and it'll come down somewhere to this area, and then it'll go up. Okay, but you have to be very careful, because that doesn't always work, especially in Forex. And I want to give you an example of that, is the Aussie Yen. If I go to the daily chart of the Aussie Yen, you're going to see, actually, let's go to the 12-hour. You're going to see kind of a trend right here. Okay. There's, actually, Kiwi Yen. Let's see here. I'll try to find a little better one. Okay. Here's one right. This is the one I wanted to show you. Let me take this label off. Now, what do you see here? Here we are on the daily. 1, 2, 3, 4, 5. Perfect wave up. Okay. Again, sharp correction down. Remember what I said at the beginning, wave 2 can never go past the origin of wave 1. This is a really deep correction, almost 100% of wave 1. And then we have this kind of sideways, all right, again, alternation, sideways move up, okay? And now here's the end of the trend right here. Market starts to go down. Well, what did I just say? A lot of times that it will go to the origin, back to the origin of wave 4, but it didn't. Here's the origin of wave 4. It's long since broken through there. This is actually a trend down now. I could actually label this move down. Okay, 1, 2, 3. Okay, and it's in the middle of wave 5 right now. Okay, 1, 2, 3. Here's the 4, and now we're going down for 5. We'll go a little bit further. Okay, so you're like, well, so that's why I said when you see a trend end, this is an initial target back to the origin of the wave, the previous wave 4. But you have to be flexible and realize that it may go further. So, well, so my next question, well, why is it going further? Maybe this was just part of a correction to a larger time frame. So I go up to the weekly chart, and I don't get any real answers here because following old technical analysis, I put a trend line on this downtrend here. We broke through this trend line, we came back and tested it. So most, technical traders and say, oh, well, the market's going up because we broke through this trend line. We came back, kind of retested it. We went up, and now look, we've gone back down through it. Okay. So it's just what I'm saying. You just have to be a little bit flexible. So when you see a trend end, then you can get rid of that. Go back to the daily. Okay, 1, 2, 3, 4, 5. When I see a turn, I see this trend end, I'm probably going to sell it. Now my initial target's only going to be here, but if I see it blow right through there, I may hold it, or I may get out and then get back in when I see that it's blowing through there. Now I'm not going to sell this now. This is almost over. Okay, but this is what I'm talking about, because we look at the Aussie Swiss. Okay, no, what was I looking at before? Aussie Canadian. Okay, 1, 2, 3, 4, 5, and we're just kind of drifting lower here. Okay, now we're drifting lower because both the Aussie and the Canadian dollar are weak. So when you have two strong currencies or two weak currencies, you're going to get kind of sideways price action, and that's why this is not really being very aggressive here. Okay, because the Aussie and the Canadian have been very weak, and so the market's not really doing much. So whereas on the Kiwi yen, the yen has been very strong because of all the kind of turmoil in the U.S. stock market and the Fed raising rates. So everybody runs to the yen as a safe haven. So all the yen pairs sell off on the yen strengthening. So that's the fundamental piece of this I'm not going to talk about. So, but there are reasons why these things move. It's not just technicals. But so that's what I would say. Now, the other thing you want to talk about, Fibonacci retracements. I like Fibonacci, although I don't try to, pound a square peg into a round hole. So if I put a Fibonacci on this whole trend, we're coming down to the 78.6 retracement, and that is a very key level on these deep retracements. So, but this doesn't look like a correction to me. This looks like a trend. So I don't know if I'm really too excited about putting Fibonacci on here, because this is not a correction. This is too steep, and it's too straight down. It looks like a trend. So I'm not a big Fibonacci fan, but I would look for some potential turn potentially around this 78.6 area. If we go back to the Aussie Canadian, on the other hand, and we put a Fibonacci on this one, you can see this line that I drew, marking the previous wave 4, lines up perfectly with the 38.2 retracement, which is a key Fibonacci level. Now, I generally see these things go more like 50 or 61, but I'm going to be very curious in watching this pair very carefully when this hits the 38.2 retracement, because not only does it line up with the previous wave 4, but it lines up with a key fib level. I wouldn't necessarily take a trade based on that. I'd want to look for some confirming price action, or some news, some economic news that would send the Aussie back higher, or hurt the Canadian more likely to help the Aussie go back up. But this is one I would watch on this time frame and lower. Okay, so here's the Aussie Canadian on the 6-hour chart. Again, this is, I'm not going to try to count this. This is sloppy price action. This is some kind of correction. It's all overlapping waves. There's no clear trend. It's definitely a correction, and it's not over yet. It's going to continue to go down. But where it goes, I'm looking probably around this area. Now, if it blows through here, then the next spot would be the 50%, then the 61.8. But because this lines up with this wave 4 right here, I am looking to potentially have this turn at this point. So I will be watching the Aussie Canadian closely for the resumption of this uptrend. Okay. So that's that on Fibo. So Fibonacci does work well with Elliott Wave, but again, it should just be a guideline. Never take a trade based on a fib level, because the market, if you interpret it wrong, the market's going to completely ignore that fib level. Okay, so use it as a guide, use it with confluence with Elliott Wave things, and like for instance this pair, and see what happens, and wait for confirming price action or some kind of economic news to get this going again. And then if I see that, I'm jumping on this sucker long, and this thing's going to go way up. So that's what I'm waiting for. And if it goes down, that's fine. Then I'll find a short entry. Okay. Again, Aussie Swiss, to me, this looks like a trend. We had this 5-wave move up, and now we've got this move down. I want to measure this really quick. So we've got 280 pips right there. And then from here to here is 290. So somebody might say, well, this is a big zigzag. It's an ABC zigzag, but I don't think so. I think it's a trend, especially with this green candle here. And again, this is, the Swiss is also a flight to safety, kind of like the yen. So I think the Swiss was strengthening against the other majors, and so that's why it was going down. So, again, got to be flexible and be able to just read where things are going. So again, use your Fibonacci's. Okay, this one you can see I already had. Here's the Kiwi dollar. Okay, another perfect trend. 1, 2, 3, 4, 5, and you see I have a Fibonacci on here, and I have it going somewhere between the 50 and the 61. So and then I'll be looking for a turn on this. And let's see if I go down here. This is going to keep going down, but this is about where I have it measured out. And the reason why I have it here is because I'm looking at this as an ABC. Let me see. Let me label the ABC. A, B, C. That's this correction. This one I am thinking, unlike the Aussie, like the Kiwi yen, I am looking at this as potentially, oops, I labeled that as an Elliott, as a motive wave instead of a correction. A, B, C. Yeah. So, and the reason why I have it marked right here, because again, A and C, much like 1 and 5, A and C are usually about the same length. I don't know if I mentioned that earlier. So if this is the A, this is 198 pips, and then I measured it off this high on the B. So here's A, B, and now we're in C. We're measuring this down. What did I say? 190. 190 takes us right to about here. So it's about where it is now. My arrow is down a little bit, but whatever, somewhere in here. Again, doesn't have to be right to the pip. So I'm looking for this to get to somewhere, around shortly that this will be turning. And that would be, if this is an ABC, it will be turning. Now again, this could turn into a 1, 2, 3, 4, 5 and keep going. So right now I have it labeled as an ABC, but I'm not married to it. I'm going to look for price action around this area. And if we blow through here, then I know I was wrong. But if we get a turn here, and we get a nice aggressive turn, some positive Kiwi news or some negative dollar news comes out and sends this back the other way, then I will be looking to buy this and continue this uptrend. So this is the motive wave up. You've got a correction down, and now it's going to hopefully go back up. So that's how I have it labeled. I have the Fibonacci on here. It'll come in somewhere between the 50 and the 61.8 retracement. If it blows through here, then I'm going to look at it as a motive wave down and not a correction. Okay, so again, just to repeat what I said a minute ago, that A and C are usually in a zigzag, especially, are usually about the same length. So just like I said, 1 and 5 are usually the same. A and C are usually about the same. Okay, but it's not a rule, it's a guideline. C might be longer, it might be shorter, but it's generally in the ballpark anyways. So when you talk about 1 and 5, so here's your 1. That's 188 pips. This one's definitely longer, 208. So again, but as I also said at the beginning, it's a visual skill. I mean, I can clearly see that this is a trend and that it ended here and now it's going down. I mean, it's just very obvious to see that. I don't need to measure every pip. I can just tell by looking at it. So, and if I really want to, nitpick and drill down. Then I'll go in and I'll find the trends on these lower time frames. I mean, I can see this one right here. If you look right here, you can see the subdivisions of this wave 1 right here without doing too much. 1, 2, 3, 4, 5. There's the wave 1, right? Remember I said nesting dolls? So here's that wave 1 on the daily. Here's its subdivisions. 1, 2, 3, 4, 5. Remember I mentioned wave 2 is usually a sharp zigzag correction, 3 wave. Here it is, A, B, C, and then up for 3. And then here's your wave 4. Again, fairly steep, but not as steep as this. Okay. So here's your wave 3, and you could probably label waves here too. 1, 1, 2, or 1, 2, 3, 4, 5, something like that. And then down for 4, sloppy, choppy wave, and then up for 5. Okay, 1, 2, 3, 4, 5. There's probably 1, 2, sharp wave down, sharp 3 up, sideways 4, and then up for 5. So there's your subdivisions of this whole move up. I just showed you all the subdivisions. Okay, and again, I'm not looking at counting every single wave. I'm just taking a visual picture of this and saying that's a trend. It's over. It's now in a correction. But inside of this are little trends and little corrections inside this bigger move up. So again, just remember nesting dolls. Okay, remember nesting dolls. That's how I remember. Should help you hopefully. So, all right. So I think that's it. Long video, supposed to be short. Sorry. Hopefully you got something out of it. Elliott Wave can take a long time. And the last thing I want to say is you should be able to click through charts and within about a minute or so on any given time frame be able to identify a trend or a correction. If you don't see anything, if nothing jumps off the page at you and you just you don't see something like this, or you don't see a nice correction, then just move on. Either go to a different pair or go to a different time frame. The longer you sit there and stare at it, the more maybe you'll find something that's not really there. Your brain's going to want to find something to trade, and that's not good. Let's see if I can find something that's like that right now. There was a pair somewhere here. I don't know. Yen, is it? I don't know. Like Euro Yen, I mean, it's broken down now. Now look at the daily chart. I remember when I was looking at this right here, this garbage. I'm like, I don't know what this is. Now a real Elliottician would take this and they go down to a lower time frame. They say, okay, well, there's a triangle in here, or it's a double zigzag, whatever. I don't care. All I know is this is garbage and I'm not trading it. Okay. But now here's the trend. The trend ended. I mean, this correction ended right here. So now we're in a 1, 2, 3, 4, 5. Okay. So I'm not in this trade because it was garbage. So I stopped looking at the pair. And then, of course, a week later, I go back and look. I'm like, oh, that's great. So I missed it. But but this isn't a trend now. Okay, 1, 2, 3, 4, and this is going to go down. I mean, you actually could take a short on this right now. Remember, this is a 12-hour chart. There's a lot of pips here. Here's the 1. That's 106. What is that? 166. So if this is the end of the 4 right here, this little wick, the end of the wave 4. 166 will take us back down to around this previous low. You can see it's also a key area of support down here. Okay, so this is probably a good spot. So Euro Yen, I'd be looking for shorts at least back to maybe the 125.40 or 125.30 area on the Euro Yen. Okay. But this isn't a thing where I'm like, this is just sideways garbage. I'm not going to sit here and label all this. I don't care. All I know is I'm not interested in trading it. Now, the purist Elliottician would say, well, if you did, then you would probably know when this correction was going to end, and you could have gotten in right here. And maybe that's true, but I'm just not interested in that. I mean, I don't know what this is. I mean, really, what I'm going to sit here and label this disaster right here. Okay, I'm going to sit here and label this. All I know it's a correction. It's sideways, it's overlapping, it's hash and trash. And now, here it was the trend. 1, 2, 3, 4, 5 of 1, A, B, C up for 2. And now we're in the wave 3. 1, 2, 3, 4, 5. And we'll have another correction and we'll probably keep going down. Okay, it may even actually go past this. Because if this is just the wave 3, 1, 2, 3, 4, 5. Okay, but this is wave 1. We're only in wave 3 right now. 1, 2, 3, 4, 5 of 3. And then we're going to correct again. Then we'll go down for the bigger wave 5 of the overall pattern. And that'll really go far. So now I'm going to change my mind and say this is going to go even further than here. Because this is just the wave 3 to this point. And then we'll have a correction to wave 3. And then we'll go down for the larger wave 5. Okay. So you can label it something like this. Okay. You can label it something like that. Okay. But we're still in the wave 3. And then I can label, again, nesting dolls, right? Change the color on this one. Okay. So here's the aqua is the larger trend. This purple is like the wave 3. So here's 1, 2 of the larger trend. Now we're in wave 3 of the larger trend. But within this we're currently in wave 4, or maybe just starting wave 5. So we'll go down, and then actually, so these should not be here then. Let's move these out of the way. I don't want to confuse you. 1, 2, 3. Now we're in wave 3. This will end. Let's say it ends down here. Then we'll have a wave 4 up, and then we'll have a wave 5, somewhere around here that will go down. So, and that will finish the larger pattern. So anyway, so that's it, guys. This went way too long. If you have any questions, please let me know. Hope you enjoyed it, got something out of it. Go to elliottwave.com, set up my EWI, watch this video again. It'll give you some good insights to look for. Remember, guys, don't force it. If it doesn't jump off the page at you, then it's not there. And just go on to the next pair and just keep looking at charts. Start at the higher time frame and work down, regardless of where you trade, what time frame you like to trade on. Don't get fixated on one time frame. Okay, get the overall picture, and then you can start drilling down and looking for the trends and the corrections on the lower time frames, and that also gives you ideas of where to get in and get out. Find the subdivisions on the lower time frame. Remember, nesting dolls. Okay, find those subdivisions within there to help you fine tune your entries and exits. That's the whole idea about looking at, drilling down, is to find these subdivisions and fine tuning using Elliott Wave guidelines and rules to fine tune your entries and exits. Okay, that's it, guys. Have a great night and Happy New Year if I don't talk to you before that. Thanks.